Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network, CREPN Radio. We're so glad you joined us. My name's J. Darren Gross. I'm a real estate investor and a commercial property insurance broker. And since my first investment in real estate almost 20 years ago, I've constantly been looking for more information about real estate investing for both my own investments and so that I can better serve my clients. And the result of those efforts have led me to form or to create Commercial Real Estate Pro Network and CREPN Radio. The guide and what we're trying to do here is have a conversation with professionals and experts on topics of interest to commercial real estate investors. Bottom line is we're trying to help people and learn at the same time. You can find us if you go on the Google and you Google Commercial Real Estate Pro Network. You'll see that we've got a Facebook, YouTube, and a LinkedIn group. And we've also got the Twitter handle. It's the @CRE Pro Network. And coming soon, we're going to have a good old-fashioned, old-school website, commercialrealestateProNetwork.com. You can help if you like what you hear. You can like, you can follow, you can share, you can spread the word in your network. Let everybody know what you hear and that we're here. Now that you know a little bit about the program and what we're about, we'll talk or set up today's program. Commercial real estate financing is always a critical piece to commercial real estate. And in recent years, if you go back to all of the commercial mortgage-backed securities, the bubble, all of that fun stuff. It's a changing environment. And today we're going to take a look at commercial real estate financing and how it's changing and what it'll look like in the future. And to do that, we're going to talk with our guest. Our guest is Robert Finlay. Excuse me. Robert Finlay. He's the CEO of Quiet Stream Financial LLC. Rob is a businessman who's devoted his career to nurturing entrepreneurship, identifying innovative solutions to everyday challenges, and giving back to the community through various charitable endeavors. Rob is the chairman of Quiet Stream. Excuse me. He's the chairman and chief executive officer. I'm in a little bit of trouble this morning. Got a little more coffee in my system here. His business success was built on a foundation of experience and accomplishment on Wall Street, during which time he held positions with major firms including Credit Suisse, First Boston, Lehman Brothers, and Deutsche Bank, where he specialized in capital markets and commercial real estate. In 2000, Mr. Finlay founded Commercial Defeasance LLC, which remains the industry pioneer and leader in the defeasance of commercial real estate loans. In responding to the ever-increasing needs of his client base, Mr. Finlay expanded the size of his professional team and scope of the support they would offer commercial real estate investors. They added corporate entities that addressed investor management, underwriting, funding, and commercial properties, legal document organization, data sharing among brokers, investment listings, turnkey commercial website design, and more. In 2013, all of the support services were brought together under Quiet Stream Financial, allowing commercial real estate investors to engage one company which had the capabilities of responding to the host of investing needs. Outside of the boardroom, Rob serves on many philanthropic boards. He's also earned equal distinction both as a race car driver and as an accomplished pilot. He's an alumnus of Southern New Hampshire University and resides in Charlotte, North Carolina with his family. At this time, I'd like to welcome to the program Rob. Rob, are you there?
I'm here. Thanks so much for that long introduction. I guess when I actually you actually hear somebody say it, it's actually long. But no, thanks for having me this morning.
Well, you're rather accomplished there. From Wall Street to race cars and a pilot. That's a full plate there. And
yeah. Yeah, well, it's one of those things where I actually grew up in a real estate family, and so prior to joining Wall Street, I was actually a commercial broker. My dad had a brokerage firm in New Hampshire that I worked for, and we got into property management. So I truly was raised in the industry of commercial real estate. So, but I do have, at least I used to have a lot of hobbies.
Yeah, well, that's so. You did grow up in the real estate business, then. So it's kind of, would you say it's in your blood then, or?
Absolutely. I think I still remember fondly when growing up when I was younger, if we were driving and there was a project being built or something going on, or a site inspection that was needed, that was our family vacation. So I remember those days. I remember those days fondly, and I think anybody who has grown up in a real estate family sort of has those memories.
Well, but the neat thing about that I find is that you do get indoctrinated to it, and you do have, whether or not you recognize it at the time, you are getting a knowledge base firsthand, and probably a significantly much more intimate knowledge than somebody that's taken a course or reading a book or what have you. I mean, you're actually seeing the wheels turn and how it affects your family and how it, the wins and the challenges and all of that firsthand. I think I love that part of the whole deal there.
Yeah, nothing like going through a couple cycles to really have a great appreciation of risk. So but absolutely, I was very blessed to be raised in a real estate family.
Oh, that's great. So when in part of your introduction there, I was reading you spent some time on Wall Street, and you formed a defeasance company. Can you tell us a little bit about from Wall Street to the defeasance company?
Well, sure. So when I was on Wall Street, as I said, I grew up in a real estate family, and even as much as I tried to get out of real estate, I wanted to be a Wall Streeter, an investment banker. But when I went to Lehman Brothers, because I had real estate experience, that's exactly where they put me. But when I was there, we structured what they call commercial mortgage-backed securities. So as probably many of your listeners know, one of a great source of long-term non-recourse debt is found through these conduits. And so I worked in one of these conduits, and we structured commercial mortgage-backed securities. So we packaged up the commercial loans and sold them off as bonds. And one of the byproducts of selling mortgages off as bonds is there really needs to be a really good call protection. And most people, I'm sure, are familiar with yield maintenance. But in generating bonds, having loans paid off is paid off early, even with yield maintenance, isn't beneficial. So there was a provision in the loan documents that required this process of defeasance, which is really just a substitution of collateral. All we're doing is we're substituting the cash flow or the payments that were coming in from the property and transferring it or substituting it with payments that come in from treasuries. And so it would make the lender whole. And so really it's just simply a substitution of collateral, but it is a transaction. It does take multiple people. In fact, there's typically more people involved on a defeasance than there is on the purchase and sale or refinancing. And so in 2000, I saw that there was a need to really streamline this process. And I left my job at Deutsche Bank and started my own business in March of 2000. The nice thing actually at the time was that nobody knew about defeasance. So I could basically self-proclaim myself as the expert, and nobody could dispute it. So we started in 2000, and in the peak of about 2006, 2007, we were doing billions and billions of dollars a year in defeasances. And even today,
wow.
we're still we're the largest. We are the largest defeasance company out there. As markets grow and the business becomes more known, you get a lot of competitors. But to this day, there's nobody who has done more or is more active in the space than we are.
Oh, that's great. You mentioned the protection in the mortgage-backed securities, so where you have to, or I guess the defeasance is you're taking the what it's based on, and you have to transfer that to whether it be a treasury or what have you. Is that a common clause in all of the commercial mortgage-backed securities, or was that unique to what you were doing on at Lehman Brothers, or is that just a common feature?
Yeah, it's actually a very common. In fact, it's common not only to commercial mortgage-backed securities, but also Fannie and Freddie incorporate defeasance language into their documents, as well as many life companies as well. So it is a fairly standard provision these days. It really started in 1997 is when it first started, and it really was primarily focused in the conduits. But no, it's a very well adopted call protection provision in loan documents. So anytime you have a long-term loan, I think it's probably or something that you should look at. It probably is a provision in your loan documents.
Got it. Well, let's move forward here a little bit, because as we've kind of talked a little bit, where commercial real estate financing has been and where it's going. The market continues to change. There's all sorts of talk in the marketplace about a commercial cliff, if you will. I mean, as far as the real estate financing and a lot of these loans that are going to be coming, becoming due. Can you talk a little bit about that as far as what you see just in the overall marketplace as far as commercial real estate funding and the current state and how the kind of a brief look forward as to what you see or what you expect in commercial real estate financing?
Sure. Well, I think there's the one thing that's truly out there is the amount of liquidity that's in the market, and I think that's really apparent. I think you're seeing that with the amount of funding sources that are available out there. Yes, we are definitely coming into an area of a lot of loans that are maturing, in particular loans that were originated in 2006 and 2007 that might not be able to be refinanced. That is a real possibility. We know that at least in the CMBS space, which I'm much more familiar with, we know that approximately 30% of the loans that are coming due are not going to be eligible to be refinanced at their maturity balance or their balloon balance when they mature. So will not be eligible to refinance. So I think that's definitely something that's out there. But I really believe if you look at, I don't think interest rates are going to rise anytime soon. I think I know the Fed was thinking maybe in June that they might start doing something. I personally don't see that. I think our traders are saying the same thing. We're not seeing enough growth, and especially with last week's job report, I just don't see it. So I think low interest rates are obviously going to help properties be able to refinance. And as we get a stronger economy, we're starting to see segments of the market, property types in particular, that are getting better. Office, retail. Those are property types that have in the past have struggled to that of multifamily and industrial, which have done incredibly strong, especially multifamily, which is a unique animal on its own. So I think overall, I think the real estate market, while it's hot and might be a little bit pricey in certain markets, I think overall, we still have a good ride left with us. And I think one of the most important things, and actually the most exciting thing that's going on in commercial real estate right now is this term called crowdfunding. It's called a lot of different things: equity crowdfunding, the Jobs Act, but primarily it's basically equity and the ability to invest in commercial real estate projects via the web or the internet is opening up the door. The amount of liquidity that's coming in, that's rushing in, is phenomenal. And I've always, every so often you see these trends in the market where you see this great transition of liquidity. I think we saw it with the CMBS market in the late 90s, early 2000, where all of a sudden people could get long-term non-recourse financing pretty cheap. We're now starting to see the component of where am I going to raise equity in order to go out and do my next deal, and we're starting to see that from people that are finding your deals from the internet, and it's explosive. And I know that commercial real estate owners, and being one myself and being in the business for a long time, we're usually lagging behind technology and the rest of the world in terms of adopting technology. But this is really a time now where as a real estate investor or a sponsor, somebody who goes out there and raises money or needs to raise equity to do their real estate projects, you really have to wake up and understand what's going on in the market, because this is the transition of the internet.
Right. So you're saying that the sponsors now have the opportunity to really promote this and attract capital via the internet. Is that what I'm hearing you say?
Exactly. So what happened was, the Jobs Act was enabled, I think, 2 years ago now. And basically what the Jobs Act allowed for was a general solicitation to accredited investors. So this means now that if the investor is an accredited investor, which means they have to meet certain income and net worth requirements. But there's, it's basically $250,000 a year in income, $1 million net worth excluding their home. But there's about 9 million accredited investors in the United States. But what this did with this Jobs Act allowed sponsors, real estate sponsors, to go out and generally solicit things that they could never do before. In the past, if you wanted to find investors, you'd go out and you'd go to the country club, you'd talk to your friends, friends and family around and try to raise money that way. Now you can open it up, and so people are coming from different parts of the country. These millennials, for example, which is a segment of the market that's quickly growing and investing in commercial real estate. They're finding their projects by doing Google searches and going through platforms and companies that are set up to have people invest in commercial real estate. And to just give you a scale, right now there's over $500 million of equity being raised on a handful of platforms in the market for commercial real estate projects.
Wow, $500 million. That's probably a little bit more than you might shake out of the guys at the country club for a investment there.
Well, think about it. It's the transparency and the liquidity and being able to source deals and diversify. So if I'm let's say I live in California and I work for one of the big tech companies. I have a lot of disposable income, but I don't really have a lot of diversification. I need to find a place. Where am I going to go? If I go into a money market, I make almost no money. But if I can understand real estate and I can find projects and get comfortable with the investment, or more importantly, get comfortable with the sponsor, then I can have some diversification. And the entry point is very cheap for projects. So we've seen people who are raising, in fact, we're in the market, so we're involved in crowdfunding three different ways. One is we have a platform where if a sponsor wants to go out and raise money on an individual project, we will go out and we'll underwrite that project, see if it fits our criteria, and if it does, then we will invest in it, and then we will crowdfund that investment. We also create customized crowdfunding platforms, which we call investor management services. We actually will create a platform for real estate sponsors so that they can go out and attract investors on their own and be able to have their own sort of white label, if you will, crowdfunding platform. And then we also do an aggregation, a listing service for crowdfunding projects. So we're in this market in different ways, but we're out there right now with a project. It's a multifamily project outside of Portland, and the minimum investment on this equity is $10,000. So instead of trying to go out and raise $250 from each person, we create and go after a larger audience and just have the price of admission, if you will, lower.
So you're more able then to segregate, where the investor wants to put their money as opposed to just in a fund. They can actually actively say, I want to be in that one, I want to be in this one, I want to be in the other, that one over there, or is that kind of the benefit of that?
Absolutely. So let's say you're an investor and you understand real estate, and let's say you have, even if you have just a moderate understanding of real estate, you might say, hey, I believe in diversification, and I really like multifamily or retail or whatever it may be. But you're right. You can sit there and you can diversify your normal investments. So you can go across the country. You can go across property types. You can go across, the type of investment from you want equity, or you might want a debt investment. You might want to, increase your yield by going into maybe a development deal. So there's a lot of flexibility and the ability to diversify, which is what makes this really exciting. But you've got to be prepared. As a sponsor, you've got to be prepared for this. People aren't going to find you unless you're actively searching for them. And if you're not creating the proper environment for the way that people want to invest, which is they want to be engaged, they want to be educated, they want to, all the stuff that takes time and effort. But these are things that have to be done if you want to go after this audience.
Yeah, I know that firsthand. I mean, just the content creation. Content is king. What is the strategy of a sponsor engaging in this crowdfunding? Are they, are there resources? Is it all self-created? Is there in your program? Do you guys provide some of that material for sponsors?
Sure.
Like white papers, et cetera. Or?
Right. So there's really two approaches. I think a sponsor has to look. I think it's not if they want to be in this, because I think it's really important if you for real estate sponsors to really consider this. It's once they get in, I think it's where do they want to go and what's their ultimate goal. If it's just immediate cash, that they want, immediate equity that they want, and they've got a good project and, can get underwritten and all that stuff, then they can go to a platform. And these are independent platforms, like our Full Capital Stack, like a Realty Mogul, like a Fundrise, and there's 50 of them out there. And that's an alternative. The other alternative, and the one that I think, somewhat biased, but the other one, which I think is a much better solution, long-term solution for real estate sponsors, is that of having their own platform. And when you have your own platform, it really means that you own the investors. You engage in the investors, you educate the investors, and those are your investors that you can harness. these independent platforms that are out there, you don't know who your investor is. You don't have any connection with them. So having your own platform is my personal belief is the best alternative. But with that, you're right. It does come. There is work involved. There is effort involved, and it's like anything. You get the returns based upon what you put into it. Fortunately for us, and knowing commercial real estate owners the way that we do, we've sort of changed the solution. Instead of just providing sort of the technology, the website, if you will, that allows you to go in and do this investment, we actually take the approach that you need the software, but you really need the people to help you execute these plans. And that's really what our business model is. Our business model is that real full-service approach where we're applying our marketing efforts to help you attract, engage, and manage your investors. So we're creating the marketing programs, the content. We're helping with the investor support. If you have a lot of investors, and that's the one thing with this program and crowdfunding is because the price of entry is typically lower, you're going to end up with a lot more investors, which also creates a lot of administration on the back end. So we're handling that investor administration, and we're also handling all the accounting, so all the disbursements and distributions, the waterfall analysis, making sure the investors receive their 1099s or their K-1s. So we're really putting the people behind, because I believe if we just give people the technology solution, it's not enough. It's not enough to be successful. And we also know that every real estate company out there, for the most part, is short-staffed. And so the principals are out there usually finding the deals, finding the investors, managing the investors, managing the property. So all of this stuff is just it's too much. There's too much to do to be successful to have one or two people do it. So that's why we put a full team behind it.
That's great. I recognize the sheer challenge of trying to keep current content and engage an audience. I mean, it is almost like a full-time job. I'm kind of curious. Do you have any kind of a frequency of engagement that you suggest your sponsors engage their audience, or is it every I guess every platform is different, or every sponsor is different, or do you have any kind of a sense of that?
Yeah. So the big thing is, we live under the ultimate belief that an engaged and educated investor is the best investor. And so the process of engagement with them is twofold. One, it's education. I think an open communication and education of an investor is critical, especially when, look, real estate is not stagnant. Things change all the time. And while you might be a multifamily investor right now, you might have, like most of our clients who are multifamily, really are struggling to find good deals. And they're now having to perhaps go into a different property type just to find yields, and maybe they've become retail. So education of the investor is critical. In terms of engagement, we really like to start, because a lot of times the investor hasn't ever been engaged unless you need to raise more money from them, or if something goes bad, or if it's time to, on a quarterly basis. We like to do it at least, I have our teams primarily doing it about twice a month. We think is a good fit, specific to their investment, and then something that's more general in real estate. And I think that gives us it helps us out too, because typically you don't want to go and give the investor too much, to overload them, but you want to give them information that's impactful, but also relevant, but also easily digestible. White papers are good. In many cases, that's a good starting point, but you don't really want to overload. You don't want to do a lot of white papers because that's just too much information. And so right. I think I'd rather keep it short and sweet so that people can digest it. I think we found that we've had great success with investor conference calls. are very, very helpful as well. It gives them the ability to ask questions, to talk. It gives the sponsor the ability to direct the conversation and sort of give a soundbite as to what's going on and what they're seeing in the market, and let them think of themselves as thought leaders. It's so important to engage your investor, because if you're not, somebody else is. And I think that's the key. There's always other people out there. If somebody's invested in real estate, I'm sure every other real estate sponsor out there probably knows them and is trying to get them to invest in their deals. And so the stronger connection that you have with your investor, and that really does come from engagement, is the best way to make sure that they stay there and stay with you and invest with you long term. And I think it's also important that if you're out there and you are transacting in business, and especially now where it's so competitive, you need to have that surety of close. And these platforms, because of some of the mechanisms in there, they actually give you a very good picture and forecast as to whether or not you have investors who are going to invest in your next project. And so that really gives you some real security when you go to get that purchase and sale, and you've got a very quick close.
I think the education and kind of that constant engagement there, the conference calls, the webinars, or whatever, however you want to do that, I think that's a huge tool. And I think that, like you said, the whoever is engaged finds tremendous value in that. I think it gives them a chance to actually hear the voice of the the invested people, or the parties that are in charge of the investment and doing the actual management. I think there is a certain amount of comfort in hearing one's voice, as opposed to reading the material that's mailed to you, or what's put on the website, or however that's disseminated. I'm kind of curious. So on your the platform that you guys provide, as far as the back support for a sponsor, what's that look like for an investor that's logging in? Are they tracking their property? I remember back in the days of the .com, the big popular thing was to go to Yahoo or whatever and watch your stock go up and down and up and down. And I would assume that in a real estate deal that you're not trying to, or that's not as much of an interest point, or just based on it being real estate. But I'm just kind of curious, what's a portal look like for the investor that's invested in a sponsor's plan?
Yeah, so this is actually a very critical component, because this is what the investor logs into is really a reflection of the sponsor. So on our platforms, which is really the website of the sponsor, when they log in, they have access to any new deals that are being that the sponsor is looking to raise funds for. But they also have a complete dashboard of every project that they've invested in with this sponsor, as well as distribution dates, when the next distribution is, how much they've received. So really good snapshot of everything that they would want to know on those particular investments, and they can see that rolled up. They can see it on an individual property basis, whatever it is. And once again, it comes back to that engagement. We want investors to keep coming to the sponsor's portal to look at stuff, or to see stuff, or to get information. So you'll have all of the closing documents as well. So a closing documents, all the correspondence, any of the tax documents, all of that information is there on the platform, so the investor can get it at any point. It's also important to note that these platforms now are so robust that an investor can actually come in, look at one of the offerings that the sponsor has, review the offering, make a decision if they want to invest, and if they want to invest, be able to actually invest, be able to fund, sign all of the documents, and do everything all online, all on the platform. And that's just such a time saver. No longer do you have to go searching for, did you sign your subscription agreement? Did you, you missed a signature, you missed this, or where's your money? It's all done through the platform. But we're also realists. We also realize that some of the current investor base, while it is definitely becoming much more tech savvy, many people have an existing investor base that perhaps is not as